Let's bring in here Craig James, Chief Economist at CommSec and also a regular here on Business Now. Craig, always good to chat to you. Can I go back a touch and go to those building approvals numbers out today? They've been weak for quite some time. There's almost no sign of a lift, notwithstanding the suggestion that there's going to be lower interest rates into the future.
Yeah, it's a very interesting one, Ross, when we look at the figures. Usually dwelling approvals track very much in line with homes under construction, but what we've got is a disconnect at the moment. We've got that sharp run up in dwelling approvals, and we've got a lot of activity out there in the markets now with homes being built. They're basically at a record 210,000 annualised pace, but we know in terms of building approvals they're around about 165 or 160,000 pace. So what we are going to see is the latter part of this year, we're going to see sort of slow down in terms of the housing sector. So these homes are going to get built, they're going to come onto the market, and that will help rebalance the supply and demand. But what happens next is these weak dwelling approvals will translate into very, very weak work under construction in the second half of the year and into 2025. So it's a real funny one sort of to be able to mix up. There is a record amount of homes currently being built, and that supply, fortunately, will come onto the market sort of over the second half of the year, and that will depress housing prices. We won't see home prices rising at the same extent that we've seen up to date.
OK, so then overnight, you then also heard, which caused the stock market to rise today, the US Federal Reserve, and in particular Jerome Powell there, really saying that he thinks the economy there is on track. And the markets interpreted that as saying there's still another 3 interest rate rises this year.
Yeah, and that's very, very encouraging in terms of the share market overnight, and certainly in terms of our share market today. A very interesting picture in the United States as well with its economy. It's driven by strong productivity growth. We've got very, very strong growth in the economy. The job market's in good shape. At the same time, inflation has been coming down, and they may get that sweet spot effectively, sort of where you've got strong economic conditions and low inflation. And that means that the Federal Reserve will be in the position to be able to cut interest rates in the second half of the year. But what could come unstuck is the fact that oil prices are rising significantly.
Yeah, that's the thing. So interest rate cuts, I meant to say, but oil, you're quite right. And oil prices have now nudged up again. OPEC Plus, the group including Russia, have overnight basically again reconfirmed that they want production cuts to try and push these prices higher. But we know that higher oil prices equals higher inflation.
Yeah, and certainly, yes, we're seeing that at the moment. We've got oil prices the highest level since basically October of last year. And these higher prices are going to feed into basically everything. It's not just filling up your car with petrol. It's the transport and distribution costs of getting sort of food and critical sort of materials around the marketplace. It can keep sort of services inflation, which is already a little bit on the high side, keep that sort of supported as well. So it's by no means to lay down misère that we're going to see interest rate cuts in the second half of the year. What we have to do is get that inflation rate down. And central banks around the world have been telling us that they need to have confidence. They need to be certain that inflation is heading towards their target zones. For the United States, it's 2%. For Australia, it's somewhere around about 2.5%. But yeah, it throws a cat amongst the pigeons, what we're seeing in terms of the oil market at the moment. US is trying to produce as much as it can to keep plenty of oil on the market. But we do know what we've got is a significant situation with OPEC cutting back in terms of production. And then we've got the other supply events, the war in the Ukraine, war in the Middle East, which is disrupting supplies into the market and keeping oil prices elevated.
I'll tell you, it's going to be fascinating just to watch this. We'll keep a little eye on this because it clearly has a lot to do with if the world slows down, you need less oil. But if the world starts to heat up again, of course, the demand for oil is going to be there as well. Craig James from CommSec, always good to have you here on the program, and many thanks for your time today.
Not a problem at all.